So you got into an accident and your car was deemed a total loss. Now what?
You in the past, I'm in the future. You mad?
Thank you so much for clicking on this video. If you're new here, my name is Kela Trishaan and I make videos on lifestyle, womanhood, and mental health. And if you are returning, thank you so much for coming back and thank you for your support. Okay, so I mentioned a couple of weeks ago that I was doing a little mini series on insurance. Pretty much just like some basic things that it seems people don't quite understand when it comes to their insurance policies. I just wanted to kind of bridge that gap. As I say in all my videos, I am not licensed to give you personalized information on your policies. I'm just giving general information from just different things that I've learned working in the industry. So if you are curious, if you've had a total loss, if you know someone that's had a total loss, and you just want to know how that process works, go on ahead and stay tuned. Okay, so very quick disclaimer, it is a very windy day over here, and you're probably going to hear some like loud objects in the background. That's basically things flying around outside, so I do apologize for that. But the first thing I wanted to talk about regarding a total loss is what exactly does it mean when your vehicle is deemed a total loss. So briefly, total loss basically means that an estimate was being prepared for your car, and that estimate is either more than the market value of your vehicle, or it's so close to the market value of your vehicle that the insurance company just simply cannot guarantee the integrity of repairs, so they choose to pay you the market value for the car instead. So usually when that happens, the estimate has to be, it depends on the insurance company, but the estimate is usually 80% or more of what the vehicle is worth. So when your vehicle is deemed a total loss, that is usually what that means. Okay, so your vehicle has now been deemed a total loss. What are your options? So if you own the vehicle outright, and what that means is that you have the title, you don't have a loan on the car, the insurance company will usually give you two different options. So the first option is going to be for you to release the vehicle to the insurance company. What that basically looks like is you selling your car for the market value plus taxes and any unused registration in the state of California to the insurance company. So you essentially wash your hands of the car, the insurance company takes it over for you, and then you can take the money that you get and purchase a vehicle of equal or lesser value. Now, if you choose option two, that means that you are going to keep your vehicle. You're going to get repairs done on your own. So the insurance company is not going to assist you with getting repairs. You're responsible for it. But now your car is going to have a salvage or branded title. So the insurance company will send you documents that give you instructions for how to retitle your car with the DMV. And the insurance company will also send a form to the DMV letting them know that this vehicle was deemed a total loss, but you're choosing to keep it and get repairs done on your own. The idea of having a salvage title is to basically protect future buyers. Should you choose to sell that car, the person that's buying the car knows that this car was involved in an accident that caused it to be a total loss. Okay, so speaking of salvage title, the next topic that I wanted to talk about is what happens if you have a loan. So usually, if you have a loan on the vehicle and you don't have enough to pay off the car in full, the lien holder is usually not going to want to let you keep that car because of the lower settlement. They want to get as much for the vehicle that they still have title on as possible. So a lot of times the only time that you will have the option to keep the car with a salvage title is if you have enough money to pay off that loan, or if you are able to pay off the car and then there's still a difference left over. At that point, you can do whatever you want with the vehicle. But the duty of the insurance company is to pay the person or business that has the title. In this case, if you have a loan, let's just say, to make it easy, there is Toyota. They have the title, you're still making payments to them, the vehicle becomes a total loss. So if we have a settlement of $20,000 and Toyota says that you owe them $19,000, the insurance company is going to pay them their $19,000, and then you are going to get that difference of $1,000. That's going to be the amount that you get after the lien holder is paid off. Now, if you are upside down on your loan, and what that means is that the insurance company does not have enough money to pay off your loan, then you will either be responsible for that remaining difference to your lien holder, or if you have what's called gap coverage, You can file a claim with your gap carrier, and they will jump in and take care of that difference that the insurance company was not able to pay. So in closing on that part, I do want to make something very clear, because a lot of people don't quite understand this. But when you get insurance on your vehicle and you're making payments on the car, your insurance covers you for the market value of the car at the time that your vehicle becomes a total loss. It does not insure your loan. So this is why gap coverage is a thing. A lot of times people think that having full coverage means that your car is going to automatically be paid off should there be a loss, and that is not how it works at all. Part of it is because your loan is contingent on your credit, is contingent on your payment history, a lot of different things, contingent on the place where you got the car from. There's a lot of different factors. So the insurance company is not going to pay for that. The insurance company only owes you for what was lost in the accident, and that is the market value of that vehicle. So what happens if you don't agree with the market value? So just to kind of make it simple to understand for somebody that doesn't work in insurance, if your vehicle is deemed a total loss, the insurance company will look for vehicles that are selling in your market area, the same year, the same make, the same model, the same options that your car is. So they can only look at things that are actually physically selling in the market at a licensed dealership, and they have to be verified. Usually it's a third-party company that does this, so there's no conflict of interest with the insurance company, but the price is based on an average of what is selling. So you are able to get credit if you have different options on your car that the average car doesn't have. Then you can get additional credit, monetary credit. If you have a vehicle that has lesser options than what is selling on the market, sometimes that can result as a ding. You also get credit for the condition of your vehicle. So if your car is in exceptionally good condition for the year, or it looks like your car has been well maintained, then a lot of times you do get credit for that. You get credit for just taking spectacular care of your car. Now, if your vehicle is below average, if your tires are bald, or if you've got some type of work, some type of maintenance that needs to be done that wasn't done, those are things that you can get dinged for as well. Because again, we're comparing it to what is selling on the market. Now, there are situations where if you truly don't agree and you've done some research and you see that the vehicles that you're seeing are selling for $3,000-$4,000 more than what the insurance company is offering you, there are times where the insurance company will be willing to take a look at their valuation report to see if they missed any options or packages on your car, or if something was incorrectly put in, if you were incorrectly dinged on your vehicle. Those are things that the insurance company can take a look at and possibly work with you on the vehicle. And again, if things are selling for much higher than what the insurance company is offering you, they will look into it to see why, to see what's going on, and make sure that they are in line. Because at the end of the day, they do have a duty to get you the correct amount. I do want to touch on this, and it can be sensitive for some people, but what you feel the vehicle should be worth versus what the vehicle should be worth can sometimes be two different things. Some people think that because, I used to get the car detailed all the time, or I just got new this, new that. You don't get paid for maintenance, and you don't get paid for your feelings. It needs to be verifiable information that the insurance company can actually go look at. It doesn't matter what you feel the car is worth. It has to be proven that the vehicle is worth said amount. So if you are not able to prove it, then 9 times out of 10, your value is going to stay the way that it is. Okay, so the last topic, and I've brought this up in every insurance video, and I'm probably going to bring it up in any other insurance video I do because it's very important and people need to truly understand. I'll make it quick, but it's basically about the deductible. If you're not at fault, why are you paying the deductible? All I'm gonna say is just remember that you signed a contract saying that if anything happened, you were gonna be responsible for said dollar amount, let's just say in this case $500, and then your insurance company will take care of the difference over that up to the value of the vessel meaning your vehicle. So even if the accident is not your fault, it's possible that you may be able to get that money back on the back end, but up front you owe the deductible. So The reason why I just want to drive this home is because this question comes up all the time, and I get it from a consumer standpoint. It's like, why am I being punished when it wasn't my fault? But the other end of that is it's a contract. It's a contract, because if you didn't have insurance and your car got hit, if that other person didn't have insurance, you would just be asked out, right? So you're in a situation where you're not asked out. You have someone to help you. You have a company to help you if something happens, but the contract says that you're responsible for this dollar amount, and then the insurance company pays over that. And it is the same whether you are at fault or whether you are not at fault. So I just want to make that crystal clear. Okay guys, so I know that was a ton of information, and again, I'm just simply doing these videos just to bring awareness to what your policies cover, because a lot of people are misinformed, or they think they know and they really don't know. And I just wanted to kind of give you some pointers for if you are ever in this situation, which I hope that you never are. Again, if you know somebody in the situation, or if you've ever just been curious, I just want to give pointers so you know exactly what's being covered, and you know when to ask questions and when to just kind of let it be. So if you enjoyed this video, please go on ahead and give me a thumbs up. It really helps with the YouTube algorithm. If you have not already subscribed, please go on ahead and click that subscribe button below, and be sure to turn on your notification bell so you don't miss any of my future uploads. With that being said, you guys have an amazing day, and I will see you next time.
You in the past.